we're going to talk about process and activity-based cost systems in this unit. The learning objectives have to do with converting physical units into equivalent units, prepare a process costing report, assign indirect costs to activity pools, and compare the results of a volume-based cost system to activity-based costing. We're going to focus, the kind of anchor passage is going to be Matthew 25:14-30, and it's a very, very common or well-known story. It's something you're very familiar with. A man's going on a journey, calls his servants and entrusted his wealth to them. He gave one 5 bags of gold, another 2, another 1, each according to his ability, then went on his journey. And then the man comes back and asks what the servants did, or the stewards did with his resources, and the one with 5 did very well. The one with 2 did pretty good. The one with little, did nothing. And the kind of the point is that if we do well with what's entrusted to us, no matter how small it might be, God will give us more and more responsibilities. And the same, I mean, it's not direct one for one, but the same, it tends to be true in the workplace. You do well on a small project, your boss will give you another project. You do well on that, you'll get another project. You do well on that, you'll get another project. And that's how you set yourself apart over time. This parable is a powerful model of stewardship, performance evaluation, and return on investment. Each servant is given resources, and their effectiveness is judged based on how they used and multiplied what was entrusted to them. In accounting, this mirrors the responsibility of managers to wisely manage budgets, evaluate performance through metric, and demonstrate faithfulness and accountability in the use of company resources. Luke 14:28, suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? This verse promotes the principle of cost estimation and financial planning. It's a cornerstone, which is a cornerstone of managerial accounting. In business, before launching products or investing resources, managers must analyze cost behavior and perform break-even and cost volume profit analyses to assess feasibility. This scripture underscores the value of planning and preparation, reinforcing responsible budgeting and project evaluation. Proverbs 27:23-24. Be sure you know the condition of your flocks. Give careful attention to your herds, for riches do not endure forever, and a crown is not secure for all generations. These verses stress the importance of regular monitoring and valuation of one's assets. In modern accounting terms, this aligns with financial statement analysis and performance measurement. It reminds managers that business resources must be tracked and evaluated over time for sustainability, and emphasizes diligent stewardship over assets and investments. 1 Corinthians 14:40, but everything should be done in a fitting and orderly way. These verses stress the importance of regular monitoring and evaluation of one's assets. In modern accounting terms, this aligns with financial statement analysis, performance measurement, reminds manager, very similar to the previous verse, emphasizes diligent stewardship. Process costing is used by companies that produce homogeneous products or services using a series of standardized processes: canned and bottled goods, frozen foods, paper products, and on and on. It's also used by service firms that perform routine processes. Cost flow and job order and process costing, make sure you know the differences. Process costing production report. It's the foundation of a process costing system is the production report. The report provides information about the number of units produced, the manufacturing costs that flow through a production process during an accounting period, and is used to determine how much manufacturing costs transfers out of work in process inventory and into the next processing department. And to value any good or any units that are in process at the end of the accounting period. This report is an important tool for managers and accountants. There are two methods to use in preparing this report: weighted average and first in, first out, FIFO. Here's a description of the two approaches. Weighted average averages the cost of units in beginning inventory with the cost of units that were started during the period. And FIFO assumes that the units in the beginning inventory were completed before any new units were started. So there's a little bit of difference. As you make sure you understand this table, and when you work the problems, make sure you understand how the differences in the cost flows. Steps in process costing, the weighted average method. You reconcile the number of physical units, convert the physical units into equivalent units, and then calculate the cost per equivalent unit. Reconcile the total cost of work in process inventory, and then you prepare a production report. Step 1, reconcile the number of physical units. And in this case, it's going to be a barrel of wine as the physical unit. So we need to know the units in beginning inventory and the unit started. And then we need to know what's completed and what's in ending inventory. So in beginning inventory, we had 200. We started 1,800. We have 400 in ending inventory, so we had to have completed 1,600. We convert those into equivalent units using weighted average method. So what happens is raw materials is put in at the start of the process. So the inventories are always going to have 100% of direct materials, but conversion costs are added or spent as it's processed. So if it's 60% complete, it has 60% of the conversion costs. So if you start 2,000 units, you put the grapes in, but the process of making wine is 60% complete, you haven't spent 100% of the conversion costs. You spent 60% of the conversion costs. And in this example, we have 1,600 units were completed. So our physical units, we had 1,600 completed and transferred, 400 in ending inventory. The 1,600 units completed and transferred had 100% of the direct materials assigned. So we have the equivalent units is the same as the actual units. And since they're completed and transferred, 100% of the conversion costs were spent. The number of physical units and equivalent units, again, is the same. Ending inventory is 100% complete for direct materials because, remember, we put the grapes in at the beginning. So there are 400 equivalent units of direct material, but they're 60% complete. So an equivalent unit, we just multiply the 60% times 400, and we assume that 240 units are complete. Instead of the math gets messier and it gets much harder if we assume that 400 units, each individual unit is 60% complete, which wouldn't be the case because that wouldn't be how the production process unfolded. It would be that some of those would be, well, they wouldn't be complete. They'd all be in process, but it would be the same as. That's what equivalent units means. Cost per equivalent unit, we have our beginning inventory, current period costs, total manufacturing costs for direct materials and conversion costs. We divide it by the equivalent units, we get a cost per equivalent unit. We reconcile the total work in process inventory. costs assigned to units completed and ending inventory, direct materials, conversion costs, and total cost. And we see in ending inventory, we have 400 units of direct materials, but 240 units of conversion costs times our cost per unit. This gives us our total costs. And make sure the production report that you study that, follow all the costs through, make sure how it works. The FIFO method, we reconcile the number of physical units, we can compute them to, or convert them to equivalent units. We calculate the cost per equivalent unit, and then we reconcile the total cost of the work in process inventory, and then prepare the production report. So we had 200 units in beginning inventory. We started at 18, completed 1,600. Units completed minus units in beginning inventory equals units starting completed. Units started, so these are the calculations, the order of calculation. We had 1,600 units completed, 200 units in beginning inventory, so we started and completed 1,400 units. Or we can say we had 1,800 units started and we had 400 in ending inventory. We get to the same number both ways. Beginning inventory, starting, completed, ending inventory. So raw materials for the 1,800 units, the beginning inventory was 100% complete for direct materials and 70% for conversion. The ending inventory is 100% direct materials and 60% for conversion. Make sure, again, you study and trace the flow of this. Calculate the cost per equivalent unit, current period costs divided by equivalent units. So it's 450 and 540. We reconcile our total costs. We reconcile the total cost of work in process. And here's our production report with the FIFO method. Make sure that you know the differences between the weighted average and the FIFO method. Trace the cost through. I could talk about it for a long time, but until you trace the cost through and see it, you won't really understand it.